Distinguished guests, Mr. Chairman, friends and partners in the room. Ebullio Capital is a hedge fund. We manage commodity hedge funds. I am a metals man, so base metals and precious metals is basically what we do. The role of the hedge funds in mining finance has, as His Excellency said before, been ongoing in Turkey since the late 90s. I thought maybe it'd be useful to talk a little bit about the other aspects of finance. And we're a hedge fund, so we're probably more blunt than most people. And I apologize to the gentlemen who make a living out of these three forms of finance when I characterize them. The way we look at bank finance is, if you can get it, you probably don't need it. The banks will take a long time, and most likely they will say no. Private placement and IPO financing, yes, it has a role. However, most likely you'll see a stock getting beaten up, be illiquid, and you'll probably get delisted very quickly unless you're really, really good at what you do. Off-take agreement finance, yes, it works. However, they will take a hefty, hefty chunk out of your upside. They will tell you what to do, and most of the times they'll probably run for the hills unless you deliver probably before you promised to deliver in the first place. That leaves hedge funds. Now, there's plenty of money out there. The world works on supply and demand. The supply of money, particularly in the last 5 years with quantitative easing, has become very, very, very infinite, and there is a lot of demand for financing. A hedge fund can go in very quickly and act as an intermediate between the supply and the demand. Our kind of investors used to be very high-risk family offices, high net worth individuals, some semi-institutional investors that were prepared to take some risk. In the last 5 years, we've seen good demand from real institutional investors, such as pension funds, university endowments, insurance companies, mainly because they have made commitments over a very long time to deliver a return. In the last 5 years, they've seen that return go to zero. Leave money at the bank, they'll get less than zero. And if they just leave their money at the bank, actually less than zero is a result, because the inflation of 5% a year eats up the money you're sitting on. What they do want from guys like us, they want to make lots of money, but they don't want to take any risk. Now, they want to take a little bit of risk, but no, they don't really. So they come to us and they say, look, we want big upside, we want you to actually make us a return, we want you to guarantee it, and please don't lose our money. So what do guys like us do? Again, we're metals people, so we go to them and we say, okay, against that you have to promise us your long term. So not the short-term flighty money that His Excellency mentioned in his keynote speech, but we want you to commit in a private equity type structure while still being a hedge fund. In the current climate also, the endowments, the pension funds and so on, like to see guaranteed cash flow. They want to see money out so they, in their turn, can make their commitments. So we were approached by a number of our cornerstone investors in the last 4 years who said, can you do something like that? And whilst we're not magicians, we're decent at what we do, and what we do in a nutshell is we take risk.